Hello everyone and welcome back to another video. During this video I'll be showing you an efficient scalping strategy for you to use on the 5-minute time frame or the 15-minute time frame, whichever you prefer. Both work great with this strategy. So the prerequisites or the indicators we're going to be using is just a couple of moving averages to help us determine the trend and the direction of our trades, as well as help us see where price has been recently. So the moving average that we're going to need is, well, 6 moving averages spread across 3 different time frames, which will confirm the direction of the trend and our trades. So as you can see, we're on the 15-minute time frame on the British pound with the Japanese yen, and on the 15-minute time frame we're going to need 2 moving averages. That is a 200 moving average representing the long-term moving average for this time frame, and we also have the 50 moving average, which represents the short-term moving average. And through the use of these we can determine the trend, and in case the short-term moving average or the 50 is above the 200 or the long-term one, we're looking for long positions. So in this case, that the short-term is above the long-term, we're looking only for buy positions, and vice versa. If the short-term one is beneath the long-term one, as in this case, we're looking for short positions. This direction needs to be aligned with the high time frames and those moving average as well. So if I were to switch to the 1 hour moving average, the 1 hour time frame, you can see that we have the same moving average, same colors, with the white representing the long term, the blue one representing the short term. And in case the um, long term is beneath the short term, we're looking again for buy positions, and if the short term one is beneath the long term one, we're looking for sell positions. So both of these need to point to the same direction. So in case, let's say, the hourly is saying, let's say, go short, like this instance right here, but the 15-minute says go long, we do not get into trades. And in addition, we also need to have a look at the daily. So all these three need to be aligned to get into trades. And for the daily, we are actually using an 8 period moving average and a 21 period moving average. And this will help us determine the trend of the past few days on this chart. And the short-term one is represented on the yellow color, the long-term one is represented on the purple color. So 8 and 21, and in case the yellow one or the short-term is above the long-term, again buy positions, and vice versa. If yellow beneath the long-term one, we're looking for sell. All these need to be aligned in order for us to place a trade. So as you can see, the daily time frame says we're going long. So let's go down to the 1 hour. And if I were to go back to where I've marked my area, it's exactly on where the crossover is. So I will count that in, considering that we have been in an uptrend for a while. So I will be confident enough to be taking this specific trade, and this a trade that I've actually gotten in. And you can see, if I were to you can see that it actually aligns with the time frames. So it was used as resistance, so it was an extra resistance and an instant rejection of the moving average, so an extra confluence, but that doesn't really matter. This is trade specific. So uh, once we have confirmed the two high time frames, we need to go down to the either the 15-minute or the 5-minute. And let me just find where the trade is, or the trades that I'm going to be showing you. So zooming in, uh, once we confirm the trade and the trend that we want to be placing our trade, we need to look for retracement. So if you're not sure what a retracement is, it's essentially when we are in an uptrend. Let's say in this case we are going up, and we see this drop in price. This is a retracement, and this is where you're looking to get into trades. So in an uptrend, you'll see opportunities like this when price is dropping, and you're going to place the trade around this area because it's the cheapest area to enter, and you're going to be going long, targeting previous highs. So what exactly are you going to be looking for to place your entry? The first thing is the retracement or towards the moving average, and then you're going to be looking for confirmation. And one important thing is that you need the retracement to be sufficient enough. You don't want the retracement to be a small height. For example, imagine price went kind of like this, went sideways and eventually reached the moving average. This is not a sufficient retracement, in my opinion, because I wouldn't be able to target high enough. So I want to be able to target high enough to get around a 2 risk reward ratio, which is what I like to have, at least 2 risk reward ratio, and or even higher. So once the price retracement reaches this area, I have a lot of breathing room and a lot of area to get profit off of. So that is a good sign. I'm looking for let's say an engulfing candle, which is the case right here, or maybe another candlestick pattern for entries. So once I see my engulfing candle right here, you can see that it engulfs the previous bullish candle and breaks through above the moving average. I'm going to be placing my entry on the close of that candle, targeting previous highs. You can see targeting around this area, which was respected multiple times, and slightly beneath that. And my stop loss would be beneath where the price has been. So beneath this week and this week right here. So they're around the same height. So we get a great risk reward ratio, and this is how you would be looking to enter trades. Again, looking for a nice retracement to get a nice breathing room to place your entries with a healthy risk reward ratio. And again, next example right here, in this case you can see that price was not moving downwards. Instead, it was kind of waiting for the moving average to hit. Again, you can place this kind of trade like this, but you will be targeting around this area, and your stop loss will have been uh, I would say this area right here. So you can see that the risk to reward ratio is 2.5. So it's not a great risk to reward ratio. This is not a trade that I will have gotten regardless. That you can see that eventually we got the trade, but this is not how I would prefer getting the trades in. I want price to be moving towards the moving average, not waiting moving average to reach the price. So that is one thing that I prefer to do. So this is not a trade that I would have gotten. Instead, I will just wait for the next opportunity, which opportunities do come. So waiting for the next opportunity, you can see price pushed aggressively upwards, and we are waiting for the retracement. You can see whenever you see price moving aggressive like this, usually retracements are just as aggressive. So you can see price retraced aggressively downwards, broke through the moving average. We don't mind that. We're still looking for positions long, and we are going to be getting in around this area right here after the engulfing candle. You would make a case that you could have gotten in around this area right here, so this green candle, but I would probably wait for the next candle to close to give me an extra confidence, because that this is not an engulfing candle, this is not any candlestick pattern, and due to how aggressive the price was dropping, I would prefer having an extra confirmation. So maybe another green candle close or something like that to give me that extra confidence. In this case, it didn't. So I will have waited for this engulfing candle right here, placing my trade, looking left and see where price has been recently. I will place my trade around this area right here, around this take profit at least, and targeting a stop loss, looking left. So beneath this area as well, placing this would be, I think, my stop loss. So you can see around a 2 risk to reward ratio, and we got another trade. So um, you could also have taken this trade, for example, and place this trade after the engulfing candle, looking left, placing your stop loss beneath where the wicks have been, or maybe the same stop loss as before. I'll place it slightly above, something like this, and targeting previous highs, maybe around this area right here, and you would eventually have gotten the trade, as you can see. So you can repeat this process over and over again and test the strategy out, and I can confirm that it actually works. So I can show you a couple more examples, but I feel like you get the idea. It's not a very complicated strategy, so I don't want to waste your time. If you want more examples of these, maybe a live trade, please comment below, and I'll be doing that happily. So I hope you found this video useful and found this strategy helpful for you. Thank you for watching. If you enjoyed this video, make sure to like and subscribe onto the channel. Thank you for watching. Have a good rest of your day, and goodbye.